Hi there traders, this is Steve Miley, the market chartist for FX Explained, and this is our regular weekly macro watch update for the week commencing the 2nd of November 2020. Shares plunge as second wave grips Europe, US election risks. So first of all, we're going to take a look at the macroeconomic and geopolitical developments over the past week into the end of October. So COVID-19 cases in Europe and the US are surging, hospitalisations and deaths are rising. The second wave is truly upon us. In the UK and in Europe, more stringent lockdown measures have been announced in here over the last week, which is certainly going to potentially damage or very likely damage those economies on the continent. We've also seen a lack of a deal reached for a US economic relief package, which has been disappointing ahead of the US presidential election. And whilst we're talking about the election in here, Biden remains intact. The strong Biden lead remains intact, but a transition of power is a significant concern. Back in Europe, the EU-UK trade talks have yet to make any decent progress since resuming. And earnings season has kind of gone through in the US, with the major earnings players now reporting. Microsoft, Apple, Amazon, Facebook, Google, all reporting last week. Many of these beating their top line revenue and earnings estimates in here. But forward guidance, particularly from Facebook and Apple, was somewhat negative, and overall the earnings season has been rather disappointing. The price action has been significantly negative, even though the data being released from the various companies has been relatively positive. Now let's take a look at the global financial market developments in here the last week ending the 30th of October. Well, Europe has led us lower. Here's the DAX, the German index, very bearish, plunging lower through not only lows in here from September, which we did the prior week, but also taking out lows from June at its lowest level since May. Similarly, the Dow Jones has started to see a more significant sell-off, breaking down through September lows at its lowest point since August, even July, and certainly looking more negative than previous. On the FX space, we've seen the risk currencies now start to look more vulnerable. Australian dollar versus US dollar selling off, prodding below 70.00 in here and taking out the September low. Whilst here we see the US dollar versus the Canadian dollar surging higher. So the risk currencies weaker across the board. This is Canadian dollar weakness, US dollar strength, US dollar going up as a safe haven, and also Canadian dollar selling off because of the weaker oil price in this risk off scenario. And it's not just the risk currency in here. We're seeing both the reserve currencies of the euro and the pound weakening against the dollar as the US dollar has strengthened across the board. EUR USD significantly lower, again close to September lows, reinforcing the topping pattern that was put in August through September. And the pound versus the dollar also lower, partly to do with pound strength, but mostly pound weakness, but mostly to do with US dollar strength in here as the pound dollar has dipped back below 130. In the commodity space, copper has sold off in here, having rallied strongly through October to a new multi-month high, but a sell-off over the past week has reflected this risk-off theme. And similarly, that risk-off environment has been seen in the oil markets, with crude oil futures selling off significantly down towards the $35 level. And gold stays within a range, but at the bottom end of that range, getting down close to the September lows, that really reflecting the US dollar strength. So let's take a look at the week ahead, the week commencing the 2nd of November. Well, first of all, front centre stage is going to be Tuesday's US election. Remember, both the election for president, but also the congressional elections in here, and the results that come over the following days will be critical this week, particularly if we don't get an easy transition of power in the presidency. Just a reminder that US clocks did shift backwards this past weekend, with the European and UK daylight saving time ending the prior weekend. We're also going to be monitoring COVID-19 hospitalisations and cases, plus the impact of the new lockdown measures on national and regional economies. And on the central bank side, we have some significant developments coming up. We have the Reserve Bank of Australia in play. They come in play in here with their interest rate decision and statement on Tuesday. We have the Bank of Japan meeting minutes on Wednesday. Then on Thursday, we get both the Bank of England and the Federal Reserve with their interest rate decisions, statements and press conferences. Both of those on Thursday. The standout data for the week comes from the global market and the US ISM Purchasing Managers Index data, the PMI data. We get the manufacturing data on Monday, and on Wednesday we get the service sector data. Plus we also get the US non-farm payroll report, the employment report. So let's take a look at here on the calendar. On Monday, there goes global market and US ISM manufacturing PMI, the presidential and congressional elections on Tuesday, alongside the RBA interest rate decision plus New Zealand employment, Bank of Japan meeting minutes on Wednesday, alongside Australian retail sales, and then we get that market and ISM services PMI also on Wednesday, along with US ADP employment change. Thursday brings the Bank of England interest rate decision and also the Fed alongside US jobless claims. And on Friday, we get the US employment report and Canadian employment report. I'm going to wish you all a great trading week. Please do stay safe out there, and I'll be with you again next week for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.